Not a great day today, but perhaps just some cold feet going into a very packed schedule over the next couple trading sessions. Tomorrow, obviously, we've got Jerome Powell at Jackson Hole, likely unable to fulfill the market's most deep dovish desires and signal 50, which probably means 25, which comes back to the point that I was making yesterday about this extreme downside in the dollar that looked like a bit of a cautionary tale for the market generally. I've had the red light on the dollar now for weeks. I think that needs to go yellow on the potential here that yields in the dollar reconnect a bit. My point yesterday was that the dollar had been making fresh August lows while the yield on treasuries was not. So there's a couple of ways that gap could close. The dollar could come up or yields could then go down. The second point was that neither of those scenarios was obviously positive for the market, and that's why yesterday's super frothy, high beta, small cap Bitcoin, high yield driven rally seemed to be just too much at this juncture. What you generally want is a more stable, economically driven relief trade, which is what we were getting in the first response to the sell-off, which was the bounce in yields, the 10-year in the blue, the bounce in the dollar. The careening sell-off in the dollar, to me, is a big red flag because it suggests that our economy is losing so much of its edge that the Fed has to then go an emergency cut. So that's not a good thing. But then the other outcome to kind of normalize the relationship would be for the Fed to not go as deep as the market wants and not give those emergency cuts. But here's the catch. Even though that signals underlying better than expected strength in the economy, it also puts the market in a spot here when it's been looking for 50 basis points that could create some volatility. The fact that yesterday we had a big rally on the back of bad economic revisions, to me, is a much more toxic market than what we were getting in the last 8 days. And today, again, what we saw was good data in the form of the PMI. Manufacturing was abysmal, but we've known that for a while. That doesn't really move the needle. It's not very surprising. The fact that services came in above expectations and the composite PMI beat, that was your tick high for the S&P in the day. And as yields rose through that and the dollar firmed up, the stock market threw a fit. That, to me, is the worrisome part of the market. When you're trying to still do this bad is good is bad thing, that's an unhealthy market to me. So I'm not changing the green line on stocks yet because we've got such a good rip behind us and good momentum. But boy, it's a tenuous one. So for the moment, the light on the dollar just goes yellow to reflect the fact that yields seem to have put in their low, and with Powell unlikely to fulfill the 50 basis points possibility, which is still priced in at like 30% right now. That should be probably going to zero unless our data is going to roll over. But you don't want that either. What you want is stability in the economy, and you want high quality leadership in the market. So today, the other problem is that some of the higher quality tech stuff led the sell-off. You got a drop in NVIDIA at a point on the chart that you don't want. And you also got the S&P kind of getting rejected, possible like double top type stuff. But usually the way, in my experience at least, the double tops play out is it's just a little chop before you go back and through it. So that's why I'm not panicking about stocks. But I'm going to be quick to change that light on equities because the underlying theme of rooting for bad data, rooting for Fed cuts is not the type of market you want. That's not a healthy market. If the Fed needs to go deep and drastic, then it suggests there's underlying issues. Tomorrow, obviously, the drama is on, but as much will be saved for next week on NVIDIA earnings too, as that chart, which I pointed out yesterday, also got rejected. A few pretty serious events here in the last 48 hours that call into question the sustainability of the rally. The rejection of NVIDIA combined with the dollar firmness showing us something got out of whack in the last couple days around the market's perception of what it wants as a catalyst. You don't want bad data. You want good data. You don't want to have a hyper dovish Fed. You want a measured, calm Fed. So let's see if the market can respond to that tomorrow, because I'm sure that's what we'll get from Powell. He'll say, yeah, we're ready to go 25, but don't get your hopes up for more. It could be a start and stop. It could be a pause and assess. Not going to get the hyper dove, I don't think, by any chance. If stocks throw a fit on that, then the light will go back yellow because that's not a healthy market. I'll see you tomorrow.